right, welcome everyone. We're going to give everyone about 30 seconds or so to get logged on here before we take off. Okay, I can see people coming on in. Hello and welcome everyone to Class Valuations Leaders in Lending webinar series. Today we are discussing inspection-based appraisal waivers, which you will likely hear us refer to as IBWs throughout as a heads up. We will do our best to address audience questions throughout, so please submit any questions you have in the Q&A box at the bottom of your screen. We have a lot to cover, so I'll quickly introduce you to our panelists. First, we have Mark Walser, SVP of Sales and Strategy at Class Valuation. Next, we have Pava Leyrer, President of Northern Mortgage. Mark will provide more of an intro on her shortly. And last but not least, we have Christy Connolly, EVP of Valuation Modernization, also at Class Valuation. Christy, I'll turn it over to you.
Thanks, Belisa. As she mentioned, I'm the EVP of Valuation Modernization. I work on all of our modernization products and program. I oversee everything and work with our clients like Pava to make sure the process goes smoothly. And we help train teams and provide information and education regarding all the modernization so everybody understands and is able to proceed with them. Mark, I'll pass it over to you.
Yeah, thanks. And I'm going to quickly introduce Pava Leyrer. I've had the privilege of knowing Pava for many years. I've served her through multiple AMCs, and Class being obviously our latest round together, working together on this. Pava runs a great company up in Michigan with a multi-state footprint, and has both had the privilege of working with me as well as watching me struggle through creating solutions on valuation modernization over the last 4 years. Christy, I know you've been in that boat with me as well, and it's fun to see it finally popping. I feel like we put the microwave into the popcorn into the microwave. We hit start, and we're just kind of sitting there watching it, and then all of a sudden, pop, 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 pop. It's finally starting to happen. So, Pava's on this call because I think for a lot of you out there who are lenders, there's a lot of questions, more than just what is this stuff and how should we apply it. There's a lot of lender side operational questions that many of you have, and I think Pava has gone through it, and she's also walking in it right now with her teams, her processors, and her underwriters. So having her on here is wonderful, and I just want to thank her for being on. Pava, just a few words for you too before we kick into the topics and get going. Introduce yourself.
Thank you, Mark. That was more than generous. I have seen technology change a great deal, having been in the business 46 years. You see a lot from, from appraisals, the way they used to be and the way they are now. And it is nice to be able to have partners like Class and yourself over the years to help us develop the internal policies and procedures as everything constantly changes, and the GSEs, the government regulations, and then most importantly, trying to satisfy the needs of your borrower. So you've got all of these things behind the scenes, but the more we understand, the better we can efficiently help our borrowers with what they need to get into their homes.
No, that's great. And we're going to cover some of that policy and other stuff as it relates to working with borrowers and underwriters as we get into your portion of it. We're going to kick off and start with having Christy kind of outline for everyone who's just joined the call. Some of you may be familiar with PDRs, PDCs, and what we call inspection-based waivers. Some of you may not be, or is this your first exposure to it? So Christy, would you just mind walking us through a little bit of the why first and then the what? And I can put up a slide just to give you a backdrop on the why.
Sure. Thanks, Mark. We do hear that question a lot, especially right now where our industry, volume isn't necessarily high, and a lot of areas aren't having any concerns with appraiser capacity in certain markets. But a lot of you on this call will probably remember, 2020, 2021, the COVID years, when there was an appraiser capacity issue. There were a lot of issues with turn times and fees with appraisals. There were a lot of borrowers that potentially lost purchases or, weren't able to close the refinance just due to the lack of appraiser capacity with the volume needed at that time. So appraiser modernization is definitely an important part of the progress to be able to help borrowers in any type of market and not have to worry about the capacity issue. And the other piece to it that we'll talk about a little bit later and more in depth in this webinar is the data collection process is a consistent process with specific data sets that are consistent no matter who's doing them and no matter what technology is being used. It's done the same and the same data is collected. So there is consistency there, and you can rely on that across the board. And when you have a review process in place, it's the same data points that you're reviewing every time. And it's not subjective based on who's doing the inspection. So that's a really important factor as well. And it also, the consistency and the separation help reduce appraisal bias. When there's a property data collector collecting the property, interacting with the homeowner or the borrower, and the appraiser is just receiving that data. If it is a hybrid appraisal, if it's an IBW where there's no appraisal involved, then it completely reduces the ability for appraisal bias to even enter the picture. So it's helpful for that as well. Mark, I don't know if you wanted to add anything on this slide. I know you speak to it.
No, I think you did a great job kind of entering just a preview for everybody. If you're not kind of understanding what you're seeing here, you're seeing on a yearly basis, to Christy's point about 2020, all mortgage volume running through Fannie and Freddie for those years. And if you'll see, I think we all on the lending side have experienced this. Whenever we have spikes in production, that blue line running through it, that's the number of unique appraisers doing all volume for Fannie and Freddie. And you can see it's kind of hovered around 40,000 appraisers for the last 10 years or so, really 7 years prior to the last 3. And then essentially, once you get to this period of 2020, you can see this unprecedented volume spike that we all experienced and lived through for almost 2 years. Appraiser capacity is totally blown away. They just don't have the capacity to turn orders in the same 5 to 6 days that we're all used to. And in so many parts of the country, you're ending up with multi-week turn times, in some cases like Oregon, Washington, 5-6 weeks to get an appraisal back, which was just insane. So the GSEs, of course, saw this coming many years ago, and they began the hybrid pilot, working with Class and a couple of other AMCs to create the technology and the process around bifurcating the appraisal process, to Christy's point, where we're having imagery, data, and other aspects of the property that are being collected by a third party. And then we have an appraiser who is local, still competent, still, able to provide you a credible report, but they're not having to go inspect the property because we're bringing the inspection to them. So all of what we're talking about with inspection-based waiver and with hybrids are a part of that modernization. You mentioned the term hybrid, Christy. Some people are unfamiliar with that. Maybe building off the inspection-based waiver piece for a second, can you just outline for us what a hybrid actually is?
Sure. So a hybrid appraisal, to your point, is a bifurcated appraisal. The property data collection is done upfront by a non-appraiser. It's a property data collector where, like we just talked about, there's a specific data set and technology that they use to collect the data. And then that data and information, it includes an ANSI compliant floor plan, photos, any type of imagery they need. Our Class solution also provides a 360-degree virtual tour for the appraiser, so they can actually virtually walk through the property as if they were on site, interior, exterior, the entire property. So the appraiser is provided with that information, and then they complete the appraisal based on that information.
Yeah. And during our Q&A with Pava, we'll go through and we'll look at a 360 tour on a property as well, just so you can see how this is assembled. Sometimes we talk about this a lot, but many lenders I've noticed when I talk to them about it have never actually seen the process of how a property data collection or inspection-based waiver is put together. So we'll touch on that a little bit. I appreciate you doing that. And kind of on that point here for everyone, this is the modernization spectrum that Fannie and Freddie have put out there in the market. You have inspection-based waivers, which is down here on the value acceptance and ACE side of the equation, which is what we'll discuss in detail today. And then, of course, we have the appraisal options that are coming, including the hybrid, which will come later, that is based on these. All right. Oh, yes, I probably should go ahead and, just for everybody's benefit, I'll show you where we are at today. Some people ask what products are available now and what is coming. What can I use or not use today? Christy, if you don't mind, would you take us through these four options in terms of what they should be seeing in AUS or in their approvals today?
Yeah, absolutely. And we do get that question a lot. Some of the messaging can be a little bit confusing because there will be multiple options. But if you see any of the options on here, then that the loan is eligible for that. Sometimes it will say, desktop appraisal and traditional appraisal. But that means you can use the desktop option. So the first option up here, the ACE plus PDR and the value acceptance plus property data, those are the inspection-based waivers, the IBWs. Where all you need is the data collection. And the benefit to these, and I know Mark will talk and Pava a little bit more about this, is you have value certainty with these. It is a quicker turn time. There's no appraisal or valuation involved, so there's no appraiser involved. And so the scope of work for the data collection is less. So it's also a lower fee for your consumer. And we'll talk more about specifically what the data collection process looks like, as Mark said. But the ACE plus PDR and the value acceptance plus property data are both the inspection-based waiver options, where you have the value acceptance and you just need the data collection for information on the property. And then with those, the 1004 hybrid upgrade or the 1073 hybrid upgrade, sometimes the data collection will require an upgrade to a hybrid appraisal. And that's there's different things on the GSE sides where that will determine. And once the data collection is completed, that information comes back from Fannie or Freddie and lets you know. So hybrids are not in policy right now. The only time you would order the hybrid would be if it's an upgrade from the data collection. So you already have the data collection piece completed. You don't have to start from scratch with a new full appraisal. You can just proceed with the hybrid appraisal. So you already have the first part of it done.
Which saves a lot of money. I had a lender do that yesterday. They did a PDR with us a couple of weeks ago, and then for whatever reason they lost their waiver as the loan process unfolded with Freddie Mac. And so they were able to just come back to us, and instead of ordering a brand new appraisal from scratch and making the borrower pay more, right, we were just able to use the disclosed amount that they'd given for the appraisal and just go ahead and bump that up. I think we got it back in 48 hours. So it was a pretty quick turn time. We just took the PDR that had already been ordered, pulled an appraiser in, married them together and said, hey, give us an appraisal in a couple of days. And that's exactly what happened. And then they're moving on now into closing, which is great. Right.
Right.
So,
and that is a question we get a lot. What happens? You have to start from scratch and pay a whole new appraisal fee and have that whole new timeline start over. So that's a great timely example. You don't start from scratch. It doesn't, that you're not paying a full new fee. And it can be done quickly. So those are the upgrade options. And then the 1004 desktop appraisal, it is similar to a hybrid. The desktop is in policy. So when you order the desktop appraisal, the appraiser is completing the appraisal from their desk. The data collection piece is not a requirement from Fannie or Freddie with the desktop appraisal, but there are certain requirements that the appraiser does have to be able to obtain specific information, including a floor plan and other items that they can verify. So at Class, the way we handle the desktop appraisal is we do get the data collection completed up front to ensure that the appraiser does have confirmed verifiable information, and we don't later have to figure out they weren't able to obtain that and then start with a traditional appraisal.
Yeah, and you can see here I'm illustrating, and again, we'll show a live one as we talk to Pava on her questions, but this kind of shows you when Christy is talking about an ANSI floor plan, the ANSI requirements are actually there today for every type of appraisal, including full appraisals. But the type of floor plan specifically being required by the GSEs for inspection-based waiver, for desktops, and eventually for hybrids, and ultimately, I believe for full appraisals will be this floor plan you're looking at here. It basically has interior wall partitions, interior door, window locations, location of stairs, room labels, square footage of the home calculated to the ANSI standard, and all the calculations have to be there as well. So the appraiser can actually put those into an appraisal report if we're doing an appraisal. If it's an inspection-based waiver, the GSEs obviously want this data too. And then we provide that 360 tour for verification. So this is a great kind of jumping off point to sort of pivot into some questions for Pava as well. I guess I'm going to start, Pava, by asking you real quickly. You've now had a chance to do some property data reports with Class and also with a couple of other vendors, right? Like any good mortgage banker, you've got a couple of vendors doing this. But focusing specifically on the experience that you've had with ours, what are your general thoughts as we go into this maybe this next period of busyness, where lenders are still dipping their toes in the water? And they still have some concerns about what they've seen maybe from some of these in the early going. How did you put your team at ease, and what was the process like in getting them acclimated to kind of not, okay, where's that appraisal, but really looking at those findings and really thinking through how can we save money and all the rest of it?
Well, thank you, Mark. It's not always easy adapting, especially with your staff. You've got older, newer staff. You're trying to do some trainings, and we're trying to wrap our head around what our investors would take, what the requirements are as they were working into who was going to collect them, how they're going to get collected. We have panels. Does our panel do it? So a lot of those questions we worked through with you. And like you said, I'm keen to jump on technology anytime I can get it to work efficiently for me. And we were jumping into this right away just to make sure we had it figured out, so we didn't have too many hiccups as people were looking at it and wanting to know what to do. And it was difficult because your staff, especially your LOs and branch managers, they see PIW, they're like, we're off to the races. We don't ever have to do anything more. Doesn't matter. So this little bit of a hiccup to them was a little concerning because they're looking at it like an all-4 inspection. And
yeah,
so were my underwriters at first, wondering how all of this was going to work out. It took a little bit for everyone to understand, myself included, but to back up and to look at it and say, it's data. So first of all, the PIW, the value is the value. So no one was taking away what you stated in Fannie unless something address changed or something like that. So the value is out of the picture. This is not a value report. This is a property data report. So now how do we wrap our head around underwriting investors and how they're going to look at things as well as how we want to look at something? So the first few we had were a mixed bag, right? You get the ones that are like, oh, there are a bunch of photos, and there's a lot of photos. You know, you get a PIW, which is a single disclosure, to 12 pages possibly of a report, depending on the size of the home, and a lot of photos. Some comments are more detailed than others. So it was getting used to the comments. A lot of times it's just describing, well, Mark is here and he's wearing glasses and he's got a black shirt and the shirt's probably 3 years old and yada, yada, yada. So there maybe somebody says something a little different and you're like, oh, we don't really
so
care.
you're giving me a lot of credit there. For 3 years of replacing them in my wardrobe, I try to stretch it to 5.
But as an example, you know, it's when we talk to our underwriters, is it just data that's really not relevant to a problem or to an issue? And but then you've got the one that says, oh, Mark's shirt has a hole in the middle of the back. Do we really, you know, if he turns around, that's not a great presentation, right? So how do we address that? Is it going to be something that fits guidelines, doesn't fit guidelines? How are we going to adjust that? Are we going to call? Are we worried that our investors are going to come back to us after closing, which is a nightmare? Yeah. So how do we want to address that? And so we adapted early and let everybody know, all staff, that when the report came in, that if there was something listed that met safety, health, some other type of issue detrimental to the property, then we would assess that individually on its own basis, not in context with, oh, well, now we've got to look at everything. So we just had one where they were calling for there was an electrical outlet needed for a specific purpose to create a less damp, wet basement. Yeah. So the outlet wasn't working. Well, if the outlet's not working, the basement gets damp and moldy. So now it segues into a bigger issue. So
let's use that as an example, though, because
sure.
I think I'm seeing some chat comments too where people are starting to ask these questions. So let's use your example there. I believe in one of the examples that you gave me earlier, you had that issue, and you of course have the choice, right, at that point to figure out how to remediate it. in Fannie Mae land, you have borrower attestation of repair that can be done on a number of these items. So we could, you could say, for example, that outlet is marked as not working, we need it to work. So, hey, seller, or hey, borrower, have an electrician come out and fix that. Give me a contract invoice that shows that it's working, right? And then you can clear that with Fannie Mae. I think that's an example that's some, I think maybe even your firm, I think someone earlier this week did that. Instead of going to get a 1004D or something, they were able to use that same kind of logic and say, let's use something else that already verifies that something's repaired. Now, when you go to that outlet though, and we're back to that same problem, what if it does need to, you want to look at it and see if that's really an issue? Is that something that when you think through how your underwriters are going to address that issue, what are their options, or what kind of thought process do you get them to do to start looking at those options instead of just sort of automatically going to, the 10th floor and getting like a 1004D and freaking out?
And I just want to interject
ahead.
real quick, Pava. Mark, I'm not sure if everybody on the call knows, I want to make sure we explain, because I'm glad Pava brought that up. It's one really important distinction with the inspection-based waivers compared to appraisals is that they're not done as is or subject to the way an appraisal is, where the appraiser determines if there's a requirement or not. The property data collection, it's just providing the data and information. It's not making, the data collector is not making any determinations on what is or isn't required. They're just providing the data. So Pava and her team, the lender, the underwriter, they're the ones that determine whether there's a requirement or not. So that's a big piece of what the training and process is. That is a challenge that we hear all the time. And that's really important. That's why Pava is explaining that was one of the big pieces that they had to really figure out how to work through, because they're not used to making that determination. Usually the appraiser dictates that, but now it's a positive thing, right? Because you have the freedom and the ability to look at it and determine what the risk, potential is, and what your comfort level is, and whether it truly is, a safety concern, and where your guidelines will be for that. So sorry, go ahead, Pava. I just want to make sure everybody understood that.
Well, from your perspective, it might be positive. From a branch manager's perspective, if we ask for anything not called for by the appraiser, and I think a lot of the lenders on the line would understand exactly what I'm saying, it's a little more difficult. But to your point too, it is a little bit different. So Mark, back to your comment about the outlet, there's two different aspects. So because it's electrical, and because it was a comment that said, if this doesn't work or something, if it's not working because it wasn't working, or whatever the comment was, I don't have it in front of me, but let's just go down that, line of thinking.
Yeah.
Then he already knows there was he was told, saw there was a mold issue or something. If that didn't work, there was a specific reason for it. That's a little different than just stating I need a GFI outlet, which hopefully no one would ever say anything in a report. I haven't seen that. Or the brown stain on the ceiling. We had discussed this before. There was a brown stain. Now, if it's the size of a $50, my underwriters are going to go, and it doesn't look wet, as opposed to the size of a dinner plate that looks dark and maybe has some moisture bubbles or something. Those are two completely different thought concepts. And that's what it took, some training and some information in regard to our underwriters. One, the first thing they pull is AUS, and then they pull the guidelines specifically. Is this a clear health and safety issue? The hardest one is knowing how our investors are going to react when we don't know exactly where it's going. When you hedge your loans, you don't know exactly where it's going. Some are tighter and stricter than others. So if we use that as our base guideline, most of them revert back to whatever the agency says, whichever, agency we're working with, because they are a little different.
Yeah.
The second thing is clear and concise information as quickly as possible to the staff, to the LP and to the LOs as to what's needed and why. And then referring back. But the tricky part for us, and I think I saw a comment flash up on my screen, I'm not watching the questions, but about disclosures. So we have made a decision based on a compliance group that I sit with, which is about, I guess, maybe 50-50, 60-40 of lenders that are not giving out a different disclosure than the PIW and that are not releasing the inspection report to borrowers. So I know there's no rule right now at this moment that says which way or what you have to do. Based on, you know, some of the legal advice in those groups, it's non-legal, legal advice that others are doing, we've chosen not to give those out as well. A variety of reasons, but mainly because of the questions asked and misunderstandings. And we don't hand out our fraud reports or any of our other internal data reports. We don't hand those out. This is a data report at the moment. The value's already set. It is still a PIW. It didn't change from being a PIW, whether we have a data collection or not. It's still a PIW, so the PIW form is still valid. So we've chosen to do that at this moment in time. Ask me tomorrow, it might change. It depends on how many borrowers might complain to the agencies or to their congressman or somebody saying, I should be entitled to that, and then the rule will change. But right now, the people that I talk to, and a lot bigger lenders than myself, have chosen based on their legal teams to say they're not giving it out for those reasons. So we've chosen to do the same thing. So because of that, it makes it trickier a little bit for us to go back and say, hey, this report says this piece of information.
Right.
Now, we might list what it is, and the majority of the time, they can see the realtor, seller, borrower, they know exactly what we're talking about. If you've got a plate size brown spot on the ceiling, and we'll explain it was from data collected and that we need it explained, or we need this type of information.
Yeah.
A lot of times the seller disclosures match it up with it too. There's a small leak around the chimney. So, you know, then we just say, hey, we know this information, and we will do exactly what you said. The majority of the time, we don't order a final inspection. We will allow them to send us an inspector's report, you know, the invoice showing that it's, you know, fixed or going to be fixed, and we'll even allow a paid at closing by the seller. If it's the borrower, just verified funds, that's a whole nother avenue of verification. But so we've adopted this consistency in our underwriting department when they come in, that now makes it more comfortable for our sales staff and our production staff to be able to give comments back and explain where it is. If it were something really tricky, let's say the comment about the electrical outlet and it hadn't been working, and all four walls were full of black substance, that it was speckled and it looked odd, we might take, and we have, you know, send the photo of that over and say, does your basement really look like this? Because this is an issue.
Well,
So,
and on that point, just to kind of maybe illustrate that too, I'll just quickly show, at least with our solution on a property data report. Is everyone able to see the screen here? You should be able to see it now. I'm going to pull open and actually show you that virtual tour. So if you guys can see this, to your point, Pava, right? If you have a proper data report that did say, well, there appears to be a water stain, you know, in the bedroom by the vent. Let's just say that was here. One thing that we could do, and what we do is we give underwriters at the lender access to this capability, just as we do appraisers. So you would be able to not only look at the pictures on our property data report, but you can go in and you can take a look and zoom in on that and see if it's something that really does concern you and help make that decision. Well, it's not 100% foolproof for the reasons you mentioned. I mean, you know, we can't obviously touch the wall, but you can kind of see, right? At least, okay, has this been remediated? Does that look dry? Is it sort of painted over? Or, you know, is there more damage that's creeping down the wall? Maybe that's a concern. And then you can decide from there, maybe we do want to have this inspected, or we want the borrower to address it, or hey, get a drywall contractor out there and take a look at it before we make the final decision on this one. So hopefully that makes sense for everybody.
and Mark, to your point, let's just say that when you look at that and the picture didn't do it justice for how bad it was, let's say it's an active hole leaking, plaster peeling,
Yeah.
and then you look at a few other comments and you're thinking, man, this should be a rental loan. And I think that's part of where the agencies are going, right? They want to know the data on a particular property. LTV is not always good enough anymore. That we might then go back to your point earlier and turn it into a hybrid. That's our choice. We take that very seriously. We don't do that unless the house truly is, you've got what we would call the cure charges in every room. Then we would want a little bit more, because now it's beyond what I feel is fair, or our team, my management team feels is fair to our underwriters, to try and make a decision on something that every room looks like it's got problems, or the overall house isn't what you thought it was, and no one can see the inside when you're doing a PIW. They're basing it on other reasons, on the borrower, the basic overall of the property. So if something like that were to occur, then we would take a different stance on it and explain why.
Yeah, absolutely. I see a couple questions from Bill and Melissa, and they're about non-disclosure states, and I think you answered it. Just to kind of put a cap on it, you do not, at this point on your end, you don't even give the property data report itself to the borrower at this point, right?
No, and we are in 18 states and DC. I've been audited more than I can count in all of them. So it's so far, and we've been doing these since they first came out. So when they first came out, we jumped right in. At first we were a little apprehensive, wanted to get a little bit of knowledge, but then we jumped right in trying to get our staff accustomed to them, because they weren't going away. And your point, we lend in Maine. I don't think anybody exists anymore that really does an appraisal in Maine that doesn't take several weeks and several $100,000s, depending on where they're located. Seems to be every place we are. So this type of thing for us in those type of areas, and a lot of the rural areas, is going to be a huge benefit, in my opinion, because our appraisal staff is aging. There's just not any incentive to bring anyone new in. So there needs to be an alternative. And if we don't jump on board right away to figure it out, we're going to be left trying to, pick up the pieces later on.
Yeah, that's an excellent point. And I think a follow-up question here from Bill Jackman. Thanks for this question. I mean, the floor plans are not available from city or county. Sorry for the confusion. Not whether we're giving the borrower the report or not. So to answer that question, Bill, directly for you, so we handle that. Just to illustrate again, and I'll once again share a screen just so that everyone can see what we're talking about, not in the abstract, but in reality. Let me get to the first floor on this, and then I'll show you.
Yeah, and Mark, while you're finding that, I can kind of speak to that. If the floor plans are not available, that is one of the items from the data collection, right? The whole point of that is the data collection does provide that floor plan. The technology and part of the data collection, data set and requirements is that floor plan. And that's why I mentioned earlier in the webinar with desktop appraisals, while that's not technically a requirement from the GSEs, our process at class is to have the data collection done to ensure that floor plan is provided for the appraiser and that they do have all the data they need. So for the data collection side in the IBW, it doesn't matter if it's a non-disclosure state, because the data collection obtains the floor plan as part of that data set.
And just to illustrate this for all of you, this is an example of a data collector. By the way, just for everyone's benefit, data collectors are not, at least in our world, Uber Eats drivers kind of delivering pizza during the day and then, showing up to your homeowner's house with the phone to scan it later on, right? We have a much more vetted process. So there is a requirement that these data collectors go through background checks. They have to go through training. They do go through classes own training in our case. So we don't outsource this. We have our own network of data collectors who are mostly realtors, real estate mobile notaries, appraiser trainees, people who actually understand the real estate process. They're showing up with this device that basically has their iPhone and our software on it, and they're moving this tripod around the house. So when you look at that actual data collection I was showing you here, then you can see, to your question on the floor plan, that floor plan is being generated as they scan and image the home, right? So you're getting a 360 tour essentially. As they set the tripod up, it basically rotates like this, and it captures all of those points and images. The reason Pava said there were so many pictures in some cases is because every single spin here creates what? It's like 900 plus photos, Christy, something like that per spin. And so if we're going to every tree and every door that you're seeing here, like let's jump into the garage for a second. This imagery that we just captured of this part of the garage, it's capturing all of this detail, right? But as it's doing that, it's also building out the floor plan using the LiDAR and the photogrammetry that's in the software and in the iPhone. So we are actually rendering and creating this floor plan as we go. So as we create that floor plan, just to show you what it then turns into in this property data report, that's that imagery of walking all over the house and up and down and just setting those tripods into different points. This is the actual floor plan, as you can see for this house. I'll try and maybe blow that up just a tad, make it a bit bigger so everyone can see it a little better. You can see it's got, and I just blew it away, but it's got the details. It has heated and unheated living area. It's got the square footage calculations. It also shows the labels and everything. So we are providing this for your property data report. And if it's a hybrid or if it goes to an appraisal product, we would provide it as well to the appraiser. So they have all of those pieces built in. Anything you want to add to that, Christy?
Nope, I think you covered it. Sorry, it took me a minute to come off mute there.
That's okay. That's okay. And Bill, I hope that answers the question for you. Great question. So you don't have to worry about whether it has floor plans or doesn't have floor plans. When you engage this process with us, we handle it in one inspection. I should also point out the inspection that we do is fungible. So the data collection here works for both Fannie and Freddie, which means that, you know, if for whatever reason there's a switching of investors down the line, as long as they're approving the use of the inspection-based waiver, you can use the data collection that we did here to fulfill that across the board.
And I'll just add to that as well, something we didn't touch on yet, is Fannie and Freddie each have their own API for the data submission for the property data collection. And that's something that we do. That's not something that lenders submit to. So it's a little bit different than UCDP in that sense, where the provider of the data collection were established with each API and we submit directly to them and we receive the results and then we provide them to you. So that's where you don't have to worry about any of that. It's all bundled up in like a nice package and sent to you with the completion of the data collection.
Okay, but I think you asked me a question earlier about investors, if you're selling to investors and you're using this process, how do they have access to this report? I believe was the question.
Right, if they wanted to see, and to preface that, so far, and maybe I shouldn't say it out loud, I know everybody that's a lender on the call never says anything out loud that's going well for you. But we have not had any pushback at all in regard to any of these was submitted to either Fannie or Freddie. So we've covered our side up front, but we also connect the PIW box with the data collection to some automated conditions. So it aids our staff in knowing what to do and who to reach out to or what they should look at ahead of time when they see it. So we're even being a bit more proactive. But I did wonder, like, so we had a question, we let the, quarter, $50 size brown stain go, and then some overzealous data checker at our investor, and I'm being nice, but I think everyone on the call that's had any experience knows what that
replace some layers in there.
Yeah. So they send back and say, oh, you've got a brown spot, and we're like, really, there's nothing. It's really nothing. So I just was curious how they had access to that same information, because normally we would just try and zoom in or do something else and send it back to them and say, really, it's nothing.
Yeah.
And I just wondered, when I'd asked you earlier, can they access it? Can we point them to somewhere to do it, or can we send them the same so they can do that?
So some clarity here, and to go on your point, the lender is ultimately responsible for the saleability of the loan. So very, very legitimate point of what you're bringing up here. We do not provide this 360 tour I just showed to anyone but you and the appraiser if it's an appraisal product, right? So when we submit this product of data, this data report into Fannie and Freddie for you. It lives there now. It's on PDART and it's attached to that loan. In Freddie's side, it's in the base system and it's attached to that loan. So if you sell it to an investor, as long as they have access to those systems, which they typically do, they can go in, look at your loan, and they can see the submission right there with the PDF, all the pictures. The one thing they don't have access to, and this is obviously for privacy reasons, we do not give them access to that 360 tour. That is only for the lender and only for the appraiser in the limited use, right, for looking at that for an appraisal purposes. So in your example, if an investor upstream says, hey, I got the brown spot, what is that? You would be the ones responsible for saying, well, here's how we vetted that, how we checked that. We caught that in our underwriting process. We asked them to provide us some data, or here's a drywall inspection that we had someone do, or whatever it was, right? Or a home inspector. I think you mentioned, another one, a home inspector totally separately had done a home inspection of the property, had noted that issue, but basically said it's a non-issue. So you could have used that home inspection report to help clear that, right? But yeah, as a lender, you're the only ones with access to that 360 tour, not even your investors have it. So you'll have to be prepared to answer those questions when they come. Yeah, and those are great questions, by the way. Kind of final questions for you too as we wrap up, and I'm kind of keeping an eye on the Q&A here. But as the opportunities to use this increase, Pava, we talked about the hybrid appraisal, right? We're talking right now about the easy button, which is inspection-based waiver, right? Cheaper for your borrower, reps and warrants on the value. We don't have value uncertainty. We can get to the closing table and move on. That's great. But we're talking with inspection-based waivers, probably 10 to 14% of loans that will consistently have that, right, every time. So for most of you lenders on the call here, especially if you're living in areas that there's a lot of Fannie and Freddie activity in there and have been for a number of years, you're probably seeing somewhere between 1 to 2 out of 10 of your loans potentially coming through with inspection-based waiver. But then you have the next step, right, which is the hybrid. So talk to us a little bit about 2020 and 2021. And, especially we were managing a panel for you during that time. So, we kind of used our appraisers in a lot of the areas you didn't have coverage, but in your core markets there, especially in Michigan, you have a panel, right? And that panel's been with you forever. But even in that panel, we saw some challenges during COVID times, didn't we? Just because of the volume.
Well, there are challenges for all of us. We're only human. There's only, as much as we think there's more than 24 hours in a day, and sometimes I feel like I work 22 of them. But there's just not the capability anymore. As I've grown through this industry in different areas, a lot of these appraisers I've known for 30 years or more. Some are newer, but the majority aren't. And anyone you try to talk to or talk to them, they'd love to get an apprentice or get someone, but the rules and the regulations are too stiff for not the same reward as other industries. So if we don't pivot to something that allows an assistant or data collector, whatever we're going to do to create these hybrids, the people that are experienced and know what they're doing, my panel's great, but they can only drive to so many places in any length of time, or take my calls for questions or any of those issues. They can use their skills and ability a lot easier than just going out, taking some photos for 5 minutes, doing a quick tape measure or electronic, however they do it around the house. As you and I have talked over the years about this, it's got to go here, and it is going to go here because there's too many areas that people just can't cover. No one wants to drive 2 hours in this market or any other market unless no one's buying houses and that they have one appraisal to do.
Yeah.
No one wants to drive that far or spend that much time and then make a mistake and have to go back or have the technology. It's like a brain surgeon, taking out your sliver. So I think that this is ebbing into the correct direction, and a hybrid appraisal, in my opinion, it's no different than a hybrid closing. It's no different than e-closings or anything else that we're going to electronically. It's got to be done. And I know why, Fannie's doing it. The more data they have, or Freddie, the more data they have, the more they'll be able to say, oh, maybe that 10% or 15% goes to 20 or 30% now because we have enough data on this house. It's unlikely in 5 years that they've torn the place apart. So we already know this data. We already know this stack of things that we want. So when I call you, I can go, oh, I get a better option here in certain areas. But there's always going to be an appraiser. There's
Right.
always going to be a product. Rental loans, for example, I don't see those ever doing anything but this. There are some other types of properties, the harder rural properties or something that just needs a different expertise, needs a different look at it, just because it doesn't fit the cookie cutter that a lot of the other homes do now. So I'm excited for the appraisals to change. I mean, 62 pages or whatever they are now is a little trying for your underwriters to get through quickly. I don't care what type of review or automation and things that you have. I personally I was a little opposed to the PDR PDCs. I thought it was a little invasion, right, of what was going on, but overall, we've gotten a very good comfort level with them. And it really is just giving us data that we didn't know on a PIW that we're wondering about. We had a PIW, straight up PIW, just last week. At the closing table, they submit a $6,000 invoice for repairs on a property. We stopped the closing because we had known nothing. Had we had we would have resolved this had we had a PDR PDC prior to that. Come to find out there was mold in the basement, it was remediated for $6,000. So we got all of the invoices, we protected ourselves on a straight up PIW, but that was at the table, we had to stop the closing. I'd have rather had the PDR up front, known what I was dealing with, had it all taken care of, and been able to not have it disrupt the closing.
An excellent point. Couldn't have said it better ourselves. I think you just probably addressed a major concern that many lenders on this call and who will listen to this do have. Appreciate that. As we kind of wrap up here, I'd like to also just to look at the questions and ask the lenders on the call if there's any questions for Pava that you have just as a lender to lender. Whether it's challenges or hey, I'm not sure that I can get my branch managers to sign off on this, or they want to do more, and we just we're trying to figure it out as we go. But love that opportunity for any of you to put those questions in the chat, and we can answer them live here on the call. Christy, as we wait for that feedback to come back through, can I get some final and closing thoughts from you, just in terms of how you see the industry evolving between now and 18 months from now? Right, we've got, and this might be news for some of you, but we have a bunch of changes coming in the industry. We just had ROV, changes coming here at the end of August and September 2nd, new ROV process, all built around appraisal bias, kind of in conjunction with this technological change. We have the hybrid appraisal that's coming. Hopefully, probably most likely later this year. If not, then sometime next year there'll be some change, right? Which finally brings it into policy. And then beyond that, GSEs have also published the change in appraisal form. So we have a brand new appraisal form coming in 2025, and we have a retirement of the old 1004s and 1073s we all use, right? And we have this new appraisal form coming. So as you see these changes unfold, you've been in this game for a long time as both a chief appraiser, as a member of the Collateral Risk Network, and a number of industry and trade forums. How do you see the hybrid and the evolution impacting every lender on this call? And what do you see as some of the benefits of that as this changes?
Yeah, well, you laid out a lot of really good updates and items that are coming up. And the UAD too is something we're definitely working on, and it's not even really a form, right? The term form for an appraisal is going away. So that's a very new concept that everybody's going to have to really be open to grasping. And I think Pava really had a great closing comments and made a lot of really good points as well. And that I'm an appraiser myself. Appraisers are absolutely relevant and necessary and always will be, right? That the inspection-based waivers and data collection and hybrids are not a way to try to remove appraisers from the industry or from being needed for loans. But loans, the valuation piece of a loan isn't a one size fits all. Not every loan needs a full traditional appraisal. And, Pava brought up different examples of other pieces of the loan process that have been modernized over the years. And the appraisal piece hasn't been, it's starting to be now. And I think it's just important for everybody to understand that and understand that it's for the future, right? And that it will depend on different specific loans and what's applicable for that loan, right? Some will still need the traditional appraisal, some won't even need the data collection, and really kind of embrace that change is inevitable, and it's something nobody's really comfortable with, but it is the only constant, and it's the only way to stay relevant is to, roll with the change and make sure you're making good choices and understanding it. And I think with the data collection, we will start to see more of those. And I think that really is helpful for all the reasons that we talked about, the consistency, the timing, everything that it provides. And I think, I'm excited for hybrids to come into policy, when that does happen. I think it will be a positive thing for appraisers. It really enables appraisers to focus on their expertise and the analysis of the market and the data rather than, driving around. Appraisers
Right.
typically have, commentary in their appraisal saying, I'm not a home inspector. This is just informational from my observations, right? The data and the technology available now, especially with our virtual tour available to appraisers, provides them all the information they need to be able to complete the appraisal and really use their expertise and analysis to complete that evaluation analysis portion. So I think we'll see more of that, and I'm excited to see just the industry kind of embrace that and that rollout. And the last thing that I'll say is right now, it's not at the forefront of a lot of lenders. Pava, as you mentioned, like the volume is lower right now. There aren't really capacity issues with appraisers because there isn't high volume. So people are thinking, well, why would we use this option even if we are eligible? Because we can just get an appraisal and it's not a problem right now. But right now is when the time to really set up the processes, set up the workflows, train your team, understand the product, because it does take time to work through all of that. And now is the perfect time to do it so that when volume does pick back up and you are busier, or you are in a market where maybe there is an appraiser shortage, you will be able to have the option. You're already set up for it.
Yeah, we're not changing the tire at 60 miles an hour. We're doing it now while it's manageable. And I think the other benefit, Pava, you'd agree, is it's kind of nice to tell a borrower, hey, we're saving you money. Instead of paying $650 for this appraisal or whatever the fee is, right, in your market, it's, a class report's $275 for a property data collection. And then you can basically say, it helped, we're closing the loan and there's a refund coming back, right? And then just maybe talk real quickly about that disclosure and how you disclose it and go through that process, and we'll wrap up on that.
Well, as we had mentioned before, if it's a flat up PIW, we don't disclose anything other than a PIW form. The value is set. Most borrowers, if I don't have to come back to them for repairs or some other comment and we give them the value, majority don't care how I got the value. If I can make their loan work and they show up to closing and I meet what I said they were going to get, their loan amount, their cash to close, their PITI, the fact that, I had you stand on your head and Christy held the camera over her shoulder, it really doesn't matter, unless, of course, in the future, they want a copy of an appraisal for some other reason, fighting taxes or whatever they're going to do. But that's a whole different story later. And we fully disclosed to them, there is no appraisal. And there never was an appraisal. The PDR PDC reports are not an appraisal. And that's the key factor to understand and make your staff understand. They think, oh, they got this whole inspection report, correct? They did not. We got a data collection of data on the property with a bunch of photos. And so at this particular time, if somebody asked us for, and they really wanted it, would I release it? Probably, because there's no rule, but no one, not one cared, has asked for it, even if they paid for it. Like I said, it's no different than fraud or any other type of report. So at this point in time, and my peers in this group that I belong to, it's an amazing group that I've been a part of for a long time, and we share a lot of different things internally about what we're each doing. No one else has any issues with it right now either. I know they would tell me. So everyone feels the same way, that the non-disclosure until required, or if the state required, then I would adjust that. But at this particular point, I have had no issues as long as I'm disclosing PIW.
Awesome. Great perspective and great to hear. Well, with that, we're approaching the hour mark. So I'm going to turn this back over to Melissa just to give resources and end us out. Thank you again, Pava, for joining us. Appreciate it.
No problem.
Thanks, Mark. And thank you to all of our panelists, Pava, Christy, that was so great. To our attendees, we will be sending out the recording shortly after this is over. We will also be posting it on our YouTube channel. So if you want to revisit this over and over like I do, feel free to check it out there. And then as a reminder, this Leaders in Lending series is a monthly webinar series. So check on our socials to see what topics we have coming up next. And we look forward to seeing you next time. Thanks so much, everyone.
Great week.
Thank you.